like good money on Friday. SSB. Nice. Cold CLDNEA. Is your name pronounced as cold knee? That's how Sin told me to pronounce it. Nice. Okay. All right. Let's get started. Enough talk. Sorry. VIX correlation with SPX is the first topic. All right. No problem. Okay. So, how do I explain VIX? VIX is a volatility S&P index. Okay. We cannot chart VIX with patterns. You can, but most of the time it won't work. Like if you look for triangles and symmetrical triangles or bullish pennants and all that, right? I mean, you won't. First of all, you won't find many. Secondly, you won't. They won't work because that's not how VIX works. The only way I use VIX is to basically, let's say on Friday we entered calls at this candle. Yeah, we did. And I'll switch to 5 minutes. So I'll talk by example, so we're not talking just in the air. So on Friday, I was looking to enter calls around this area. I think we entered a little early. Should have entered here. I entered a little early because I just had that, gut feeling. It's a bullish day. I was watching Apple, Microsoft, and I'll get into that too today. Why do I watch Apple, Microsoft again? If you guys didn't hear me on live trading on Friday. So I was looking to get an SPX calls here because, I was actually on the day on Friday, I was in SPX calls pre-market, okay? Because I wanted to catch this move, and I did catch this move a little bit. Now about VIX, so at 10 o'clock Friday, May 5th at 10 a.m., if you look at it, so it's this candle, 955, right? So let's say we don't know what's gonna happen in the next candle. So let's use the replay feature and we hide the 10 candle. Okay. And then now this is the scenario. Yes, I am. Am I recording? Yes, I'm recording. Yes. Okay. So, to think practically now. Okay. So market came up as bullish, bounced off a zone, testing a zone right here in the morning. Market opens up at 9:30. Testing a zone, pull back, and now we're at the zone again, and we're looking to get calls here. At this point in time, I personally want VIX to still be bearish. I don't want a bounce situation, right? That's how I use VIX. So for example, at this level at 925, it's coming into, if I have a green box, but me personally, I have like a major area where VIX might bounce from. So if VIX just went through it, and the good thing was when I was looking to enter a 955 candle, VIX was rejecting, right? And it was still being bearish, right? And I enter calls here now. I was also watching Apple, Microsoft, and I saw spike volume coming in as well. So if you notice now, so that's one chart. Second confirmation is VIX is bearish. Third confirmation is we're bouncing above zone, right? So it's a confluence of a few things that helps me enter a position, and VIX is one of those. I do not simply rely just on VIX. Why? You cannot rely just on VIX is because sometimes 20% of the time or less, I would say, VIX will actually just be stagnant. It'll just go sideways. There was one day, not this past week, a week before that, VIX was literally just doing, let me show you. I don't remember what day that was, but some of you might remember. VIX was doing this. I think it was like I don't remember the day, but that's what VIX did. And when VIX did this pattern, SPX went up like 30 points or 40 points. Okay. So what that tells me is, or what that should tell you is, you cannot rely on Wix completely. Sometimes I stop watching Wix as well. Okay, it's how do I explain that? It'll come from experience. One, second, I can see the whole stock market is moving up. Wix is not doing anything. SPY is moving up. Qs are moving up. Nasdaq is moving up. Apple's moving up. Microsoft's moving up. SPX is moving up, but Wix is not doing anything. So do I watch Wix in that situation? I should be careful, but sometimes I don't, right? So 80% of the time I do watch Wix, especially in the bear market. I've been watching it. So that's about Wix. Any questions before we move on to the next topic? Why do I watch Wix and how do I use it? The inverse applies to puts as well. So if you notice, if you remember on, was it Thursday? Yeah, it was Thursday. I had said in the chat that in my channel, if Wix holds above 20, any pops in SPX are good for shorting. Basically, we can enter puts if Wix stays above 20. I'm not sure if anyone remembers that from Thursday, but that's what I had said. So the inverse applies as well. Because the reason I said that was because if you notice in the long-term chart of Wix, this 20 level is a very strong level. See the amount of taps on this level, right? Every time he holds, every time we reject, even now we rejected from 20, right? We're not able to close above 20. We went above, we rejected, and we came back down, right? So this is a very strong level for shorts. They need to have Wix above 20 to short SPX and the rest of the market, okay? They need to be above 20. If we stay below it, bulls are still in control, in my opinion. Okay, so that's Wix. Did Wix actually? Yeah, look, it came down even more. All right. Any questions before we move on to the next topic? No questions. Okay, next thing is holding versus scalping. Let me see the actual question. How to reanalyze. So Sabat asked this. I'm not sure if he's on the call. He's saying if you're in a position and it's taking time for the move to happen, how to reanalyze the chart factoring in the time. So I think he's referring to theta here. So I'll switch to 15. So I think this is in relation to what happened on Friday actually. Yeah. I'll have to check the timestamp of the low to remember, was it this one or that one? So we entered at 1:33 p.m. So it must be this one. Yeah, this area. Okay. So to answer that question, let me put it this way. Okay. My entry is to actually, you can call it a scalp move. Most of the time my entries are actually for the scalp move because an SPX scalp can land you 40 to 50% on your contract. But we want to make the most out of a position. So what I do is I actually enter multiple contracts in a position. So for example, in this position here, you enter one here. If you're up 40-50%, whatever your target is. So for example, this move here could have landed you like 30%. You sell one, it's testing, it's retesting the zone again, right? It's Wix at the bottom. I'm not sure if he sold here, I don't remember. But if it did, you can re-enter and then you take the second one off here. Or if you enter multiple contracts, you sell one, you're holding the second one, and you put your stop loss. You put your stop loss. See this candle here, just below that? Okay, so you put your stop loss here, you enter multiple contracts, you sell one when it's at like 25-30%. You're holding the second one, you're not watching premium of the contract. In this case, you're holding the second one until the price actually closes below this line. Okay, so that's the strategy I follow. Okay. And this gives you the ability to actually have that second contract move to next zone. And this is where you make your 100% or 150% winner. So that's one way of holding into or onto a contract, right? But I never hold all of my contracts for the zone, because the reason we're taking profits here is because for now, for me to be able to either get stopped out or take profit at the zone, I need some profit in hand to actually try that out, right? Because let's say if this doesn't happen, I'm holding everything, and if everything hits my stop loss, I'm probably gonna lose 20-25% per contract, right? On the position, I'll lose like 20-25%. But if I took some profit, either I'm gonna get out a break even, or I'll still get out in profit depending on how much profit I made. Does everyone follow what I'm talking about here? So we're talking about holding versus scalping. Does it make sense? Okay. So that's holding versus scalping. Now, on Friday, why did I hold my position? If you notice at the Lotto, I never said I'm out or anything. I was just holding it. So I think we entered at 1:30 something p.m. So I'm gonna get into this zone here. So, Zaid, 1 second. I'll answer the question in a second. Oh yeah. Okay. This is what happened on the, because it was a lotto, right? It was not an A plus setup. Most of my lottos are what should I say? 6 out of 10 times there will be good setups, but sometimes they're not. Okay. So this is what happened on Friday. I'm going to be honest about it, about the lotto. Okay. I was distracted after making this money on the first move. I went away. I was doing some stuff. I came back and I realized I missed an awesome fucking entry, right? So price came up, market was bullish, all stocks, all tech stocks were bullish, most of them. Price rejected off a zone, came back, tested the zone, market was bullish, and at that time, if you notice, 12:45 p.m. EST, Wix was rejecting right here. We have a reject situation. So you see what I mean by that? So this is what you need to see on Wix, okay? When Wix is being bearish, okay, that's what I want. Make sense? This is very important to understand, because the reason I'm saying that is because, look, Wix can actually bounce. It's bouncing, right? But now I want it to reject because I want to take some calls. So it's rejecting. That means it's bearish, bouncing off my zone. Volume comes in on SPY. Time to enter calls. Okay? I'll get to the questions in a second, guys. Let me finish my topic. So I missed this entry. So I think I entered something like here. I think the break above this level here, like 41.20. I think it was like, let me see the timestamp. Like somewhere here I entered. It was not a great entry. I'm gonna be honest with you. It was not a perfect entry. Somewhere on one of these candles I entered. You can call it a FOMO. You can call it whatever. But it was a lotto. I was playing with my profits made this morning. Market was really bullish. Not a great entry. Maybe a B or a C type setup. Okay. Price could have rejected here. Wix could have decided to bounce, and I would have lost money on the lotto trade. Okay. So it was not really a great entry. But so when I entered here, around when the price got around here, if you notice, I say in the Lotto chart, I say it has hit 155. Small accounts, manage your positions. So you're taking some profit here. Okay. Now after that, when this candle happens, this one here, the 155 candle, price drops to 80 cents, and I'm still holding it. Why? Because Wix was bearish. If you see the candles, red candles, and it's still above the zone. And this zone was previously a resistance, has now been converted into a support. Again, tech stocks were bullish, so I kept holding it. I was like, this is gonna go. I had that feeling. Market has been bullish. This was like a huge bull flag on the 5-minute. If you notice on the 15, right? Still a bull flag. Price came, retested, and it went to the next zone. And this is where I took the profit. I got out at, on the contract, I got out at like 370, I think, in this area. Now you could argue, why did it not like hold until the full top or something, right? So one, I was happy with my profits. I mean, 230%. I don't make that every day. Second, I had some meetings to go to. I'm like, I'm done with my position, done with my profits. That's enough for today. Two super green trades. And I also had an Apple 50% winner as well, right? So I was like happy with my profits for the day. So I just wanted to get out. But again, if you had multiple contracts, you could still keep one over here to see what happens in the next candle. Because if this happens in the next candle, you know, instead of going up, like how it happened here, see that? So if the same thing happens here, you get out, or you hold your runner until you're actually happy with your profits, right? Now to actually explain in terms of targets, my typical targets are zones. Okay, I'm gonna move this a little. So if you see there's a gap at the wick at the top here as well, and here as well. So I'm gonna adjust this zone live right now and save it. Usually I do it on the 1 hour or 4 hours. Okay, what's happening on the 1 hour? If you notice this zone here, recently the wicks have been rejecting a bit lower. See that? So many, 3 times. I count 3, 4. I count like so many of these. So look at this. 1, 2, 3, and then some of these small ones here. So I'm gonna move this zone here. That's how I adjust zones, right? Respect the price action. Okay, back to a normal chart. So that's about holding. You can enter multiple contracts, you take some profit, use that profit to hold your second contract. And I went over why did I hold for a longer time than usual on Friday, because the market trend was bullish, tech was bullish, Nasdaq was bullish, VIX was bearish, and we were holding above a supply demand zone. I decided to hold, even though my entry was not perfect. Okay, now to the questions. When do we stop loss on break even? Zaid, is your question on about how do we stop loss on break even? So what I mean by that is, let's consider this trade here, the first one. So let's say my entry was at 10:05, somewhere here. So let's discuss entry and exits too. Why is the chart acting so stupid? Let's go here. It won't do that now. Okay. And I'm gonna delete this. Okay. So to answer Zayed's question, entry matters as well. So how many people think my entry was good at 10 o'clock? Or should I have entered here? Candle arrow 1 or arrow 2? What was a better entry? There's 20 people, 25 people in here. I need some answers. I need to see how you guys been learning. Because every time I post a poll, hey, you guys learning now? You're like, no, we're still learning. So why did everyone follow me on candle 1? Like, is Jazzy God or something? Or is Jazzy stupid? He's entering on candle 1. Why did everyone follow me into the hell? Okay, I'm not gonna put that on you. That's on me. So my reason to enter this early was not a good decision. I would again call it like a B plus setup. Not plus, just a B setup. It wasn't an A plus setup. Why? Because I broke my rule of entering that early. The reason I entered that early was because we had so much momentum that day and I didn't want to miss it. And I was like, I really want to give like 100% winner. So yeah, that's what that came from. But it was not a good entry. Okay. This was a better entry and I could have held it. So problem with this second candle again, a fucking trading view. Come on. Problem with this candle again is there's no wick at the bottom. Usually, you know, when wicks are like that, that's like so easy for me to enter. The reason I talk so much about wicks is because of that book, Trading Bible, Candlestick Bible, sorry. Please read that. Again, if you have not, I sometimes read it once a month. Sometimes I'll just think about it. I'm like, yeah, I need to refresh my knowledge again. So I'll go read it again. But the reason I go for wicks is because it's buying pressure on a, you know, so price is going down. It's going to test the zone. There's buyers coming in, and it's forming a wick. Buyers coming in, forming a wick. Buyers coming in, forming a wick. Buyers came in, forming a wick, and so on. Buyers came in, and the inverse applies as well. Look at this. Sellers came in, forming a wick at the top, right? So and so on, right? So this was a better candle, and the retest was the perfect fucking entry. That's like the best entry in my book, this retest here. But we did not enter here. Okay, same thing here. Retest came in. I just stayed in the trade because it's above the zone. I went over the reasons already. Okay, the question was, when do we stop loss on break even? If your entry is here, okay, I recommend putting a stop loss below the previous candle's wick here. So if your entry is at approximately 41.13, 41.14, and you're always waiting for a pullback to enter, you're not chasing this. Never chase that. You know, when the price goes, don't chase that. Let's say I alert something and price goes like that. Wait, it's okay to wait. If you miss a trade, it's fine. There'll be another trade, right? So I'm talking about psychology here, right? I mean, you need to train your brain that if you miss a trade, it's okay. Wait for price to come back. You might even get a better entry than Jazzy. Some people do. Some people are really smart here. They fucking wait. For example, that guy Reaper. Notice sometimes he's in before me, and sometimes he actually enters after me, and he gets a better entry. And I've seen more people like, not just Reaper, other people as well. Denzel sometimes enters before me, or I'll wait. He won't chase, right? Thing is, if you're chasing, what that means is you're forming into a trade. You can get a bad entry, right? And then if price does this or even this, you have to get out now because you're at 30% loss. How many people follow that? Right? And the price may still do this. Or think about it. Is this a good entry or is this a good entry? Which one's a better entry? So I'm explaining this candle here, right? So that is the whole point. You have to train your brain that it's okay missing a trade. Like tell yourself every day before going to bed, it's okay to miss a trade. So there's a trader that is training himself, is looking at my strategy, has his own strategy. And he's been trading many fucking years, right? And sometimes traders need that. I actually picked up new skills last year from another trader as well, right? We need that sometimes, like refresh. So this trader is telling me, I'm not going to name him, but he's saying, hey, Jazzy, man, I mean, since I've been following you, I've become so patient that I'm not looking for trades. I just wait for them to come to me. This actually means something, you know? You can't just say, yeah, I follow the principle that I let the trades come to me. But when it actually comes to trading, you're fucking FOMOing all the time, right? So let the trades come to you. Do not chase is my principle, is what I'm trying to teach you guys. I mean, if you're not gonna change, if you're just gonna FOMO, that's up to you. I'm just saying it as like a teacher, right? Just wait for a pullback. If you notice here on Discord, look what I said to you guys. Even on the lotto. Look, May 1:30 p.m. Enter SPX 4140 calls on a pullback as a lotto. My entry is this. So what I'm trying to say here is do not chase this. What that means is if I'm posting, it's already at 140 in about 5 minutes to 2 minutes, right? Don't buy at 140. Wait for it. Okay, and that happened as well, because what happened was, so this is this trade. Price came up, okay, it came back down. This at this point was 80 cents. And if you saw this bounce of the zone, if you pick that up, this went from 80 cents to $8. I'm not lying. And from here, 80 cents to here, $4, and then to $8. That's the power of waiting for a pullback. That's how like cool that is. And once you guys get that, you know, like to enter on a pullback, it will change your life, man. I'm not lying to you guys. Once you guys just develop that, it's not even a skill. It's just your mind. just enter on a pullback, you know? It will change your trading game. So let's say on Friday, okay, let's count how many times you could have entered on a pullback. Ready? Let's put the Discord back so I can see your responses. Okay. Let's start from here. So we have like the pre-market as well, right? So let's ignore the time at the bottom, okay? This is just an exercise. So let's say you don't enter this 8:45. Yeah, price came back above a zone. It's kind of wicky. Came back to the zone. Now you have one of these three candles to enter. This was the most bullish one, right? You want to enter calls. You want to enter on a bullish candle, not a bearish candle, or it should have a wick at the bottom. Okay, so you could have entered calls here. Now you're in the middle of zone. Let's ignore all that for now. This is a pullback as well, but again, you're not really sure. Okay, so let's say this candle came up and then it came back. So that's a pullback. So you enter on this candle or this candle. Same thing. Zone, pullback. You didn't enter on any of these, but it bounced off the zone. So you have two candles to enter here. Same thing here. Same thing here, where you could have broken out on break even here. So Zai, to answer your question, let's say you missed all these trades of the morning, right? I'm not talking about Zai here. I'm talking about a normal general trader. He missed all these moves in the morning and is looking to trade around this area. And he's like, oh, is this a bounce, right? And you would put your stop below this zone here, this area. So this is like, let's say 41.38, 41.36. So you put a stop at like 41.35. Yeah. So you enter, you didn't exit anything. So you would stop at 41.35. Yeah. So that's how I do stop losses. So if I'm getting a close below the zone, this will definitely be a stop for me. I will get out here. So I answered the stop loss question, went into a bit of trading psychology, how I trade, how I think about things. So now another thing I do is I actually, for my stop losses, I don't look at my premium. I look at my zones. Guys, I'm going to put you on hold for a second. Just 1 second. My daughter's here. I need to send her away. Just 1 second. Can you get her? Okay, sorry, I'm back. Where were we? She did distract me. What was the point I was making? Trading psychology, respecting stop loss is so important. That's the next topic. So we went over stopping at break even. Okay, how to stop at break even. And you know, every time I say in the chat that put stop loss at break even, what that means is if you entered a contract at $4, around $4, if the price, so for example, let's talk about example, it'll make sense. Let's say again this trade, I don't know what we entered at, but let's say we entered at $4 and it went to $5. You know, you sell one contract and you're still holding a second contract, right? So what I mean by that is, if the price comes close to the entry again, okay, you're watching it. This is how I do it, and you can do it your way. Okay, I'm watching it, the same entry area. If I see a bearish candle forming here and it's trying to like go down below here like that, I should wait for a 5-minute candle close. But if I see a very strong bearish move, I would cut for a loss and try to re-enter. Okay, that's how I do it. I don't typically look at the premium. I give you guys, because if I'm alerting something, I give you guys like a 20-25% stop loss, because we have to respect it just from an account management perspective, from a bankroll management perspective. Because if you won't have that, whether it's SPX or SPY or any other options trade, You don't want to get used to losing 40-50% on a trade, because that will be bad for your account. That is the reason I always recommend that if a trade is going against you, just get out at 20-25% loss. If it goes back up again, we will try to re-enter, and I do that, right? So that's stop loss and management. Okay. Ingram asked a question: where your arrows would you enter on second green candle? Sorry, Ingram, I lost all the arrows and arrows on the candles. Okay, you can ask me again. You can tell me the time. I can look at it. Okay, he's saying something. Let's say you manage to enter 4, enter a 420, move too fast. Would it be wise to put my stop loss there? Yeah, I think if you're following me on an alert, I'd recommend either you look for me to get out, or better ways to actually watch my chart. Let's look for like some bad examples. Why the fuck TradingView is acting like this today? Like, I'm just going left. I'm not allowed to go left. I have to like drag it. No. Okay, just look for, so he's saying, oh, about holding, right? Let's look for a trade that actually, it's probably a bad example. It's after hour action is so like stupid, so can't go for that. Okay, I can't find an example. I'll just tell you. So, let's say I alerted something at 4 and you're only relying on my alerts, and if you can get in at 410, 415, I mean, yeah, sure, you're welcome to get in. But in terms of your stop loss, just have like 20% in mind per trade. That's all, right? 20-25% max. How I do it is, personally, I watch for zones. And then the reason I watch for zones is because I'm entering at a zone on, for example, those trades were in 5 minutes. If I'm entering at a zone, right here at this position, I think at this point we entered earlier, but let's say if I'm entering at a zone, my stop loss is just below that, right? Just like 3-4 points on SPX. That's it. So what that means is if the price actually rejects here on this candle, comes back down and tries to close below, I have to get up. Cool. So Ingram, around, because you're new, I would say around 20-25%. But what will also happen is sometimes you will get stopped out and price will still go up for calls. That will happen. You'll have to get used to it. No problem. Okay, what's next in the agenda? Okay, choosing strikes and risk to reward and plan for tomorrow. I'll get to the strikes in a bit because I have to open the IB app or option chain. Let me get into plan for tomorrow first, okay? Okay, for that we need first 4 hours. Let's also look at crypto. So guys, anyone who is not aware of crypto or doesn't watch it, I watch it because sometimes I can't put a number behind it, but NASDAQ and crypto, they move pretty like together, you know, a lot of the times. Yeah, I don't like this so many wicks, so let me go to daily first. So one thing, if you watch like a lot of YouTube videos on trend lines, a lot of traders will do this wick by wick, like point to point, like match. So either if that person is a mathematician and he knows his formulas, only then listen to him. Otherwise, it doesn't fucking matter where I'm putting the trend line, okay? It doesn't matter if it's on the wick or on the body. It's just a trend thing. You're just looking at the trend, so it doesn't matter. You guys follow that? Never look at, if someone's forming like a trend line or a triangle, it doesn't have to be exactly pinpointing to like the wick. It's an approximate thing. Okay. So this is telling me that crypto is consolidating. Either it's going to break out upside or downside. It's more closer to the downside and it's at a supply demand zone. So let's see what happens on crypto. After crypto, I want to see Nasdaq is bullish. It's 9:13 p.m. EST. Market opened at 6, 3 bullish candles, rejecting at the top right now. Okay. Okay, so Nasdaq is sort of forming a double top as of now. If Nasdaq, is this the top from like, let me compare that 1 second. This is important actually. This is very fucking important. So SPX is, it formed a top. SPX formed a top here at 4180, which coincides with this previous top here from February, and it rejected, and now we're in the lower high range. Okay, so guys, pay attention here. Okay, so I want you to learn this because so many people ask me, it's like, how the fuck do I know what the hell's gonna happen, right? Okay. Okay, so price went to 4180 area. Everyone's hoping that it gets above 4180, gets to 42, and then eventually like 4230 and 4300, right? That was the hope. It didn't happen. A lot of sellers came in. Price rejected all the way down to 4050, formed a double bottom, as someone asked in the Discord chat. And now, if you notice, it formed a lower high here on Wednesday, and then now since Friday and the futures right now, it's again in the lower high territory. What I mean by lower high, if you've not seen this before, I'll draw it again for you, is this. We have time. We have about 15 minutes. Is this. Okay, let's go to the wick. Doesn't matter. Okay, so we have lower high, lower low, lower high, lower low, lower high, lower low. Now we did close above this previous lower high, so we tried to be bullish on the 4 hour. We closed above that. Technically we are bullish, but I want price to actually close above this wick. Look how many times we rejected here since last week. Like fucking multiple times, you know. So does that tell you it's a strong level? 4150. How many people realize this now? Like how strong this level is, 4150. What happens when price closes above this, even on 1 hour? Anyone tell me? What happens when price closes above 4150 in 1 hour? Where do we go, up or down? What's gonna happen when we close above here? Do you need me to tell you to buy calls? You don't need me to tell you to buy calls when price closes above here. Closes above, right? So that's an important factor there. It needs to close above. Why I say close above? Because it can just like form a wick at the top and come back down, right? So for bulls, we need to close above 4150 on Monday, which is tomorrow, and bears are trying to stay below 4150. Okay, I'll have to look at all the economic news and all that, like what's happening from that end. I haven't seen the calendar yet, but as of now we're still in the bullish territory because it's a higher. So if this was your lower high, this is your high, and you're forming a higher low right now. Okay, this is not considered a higher low in my book. This is your higher low. Like, it's such a bullish move that happened on Friday. You're looking at around 4060, and on the 1 hour, 15 minutes might have a, yeah, on 15 minutes this is your higher low, 4110. Okay, so on 15 minutes, if you look, you need to be above 4150 for calls, and puts I might consider below 4110 depending on price action. Well, I mean, I might even consider puts here below 41.30. I might be reluctant, but yeah. Hopefully it just bounces from here, 41.30. But now, the point I was gonna make before I got into SPX was Nasdaq's top. When we made the top here on, let's get back into 1 hour or 4 hours. When we made this top on May 1st, 9 a.m., this was Nasdaq's top. So Nasdaq's already there and rejecting, right? So, well, more chances are this is gonna reject again, right? Depending on the market tomorrow. But what the fuck will happen if Nasdaq actually closes above that, bro? We can make so much money if this happens, like easy money. Why I say easy money? Because it's such a strong level now, right? It was like a high of that day. This is the highest it has been since what? Let's see that. Actually, I want to know that. So this level was last touched in August, same time as SPX, right? But Nasdaq is actually trying to close above that. It's rejecting off it. If it closes above, we're bullish, and that will help us a lot. Earnings are helping us basically. Okay, so that's the plan for next week, guys. We don't really trade Nasdaq, but I use it just to see what the tech sector is doing. But the plan is that 41.50 on SPX. If we close above, we look for calls. If we stay below, we'll look for puts depending on the price action. We'll see what the structure is in the morning. Anything can change within a few hours, so let's see. Okay, so that's the plan. We have about 10 minutes, so let's cover how do I choose strikes. What was the actual question in the chat when someone asked about this? It was about oh, can't find the question. Fuck it. Oh, fuck it. I can't find it. Anyways, I think it's just about how to choose strikes for SPX. Okay, let me bring up my option chain. Just give me a second. I'm just gonna log into my trading platform. I wasn't ready with that. Okay. While I wait for that, how was your weekend, guys? Someone asked a question. Okay, yeah, here's a question. Small but priority, which contract you going for at which time? Because there may be slow price action and theta decay. So, selection of a contract, guys, depends upon your account size. If you notice, I'm actually going for, yeah, Ibushi, let me bring the option chain on and we'll explain from there. Option chain, please present yourself. What the fuck is it doing? Why isn't the option chain coming up? Sorry guys, 1 second. I'm not sure if they're running any maintenance or something. The option chain's not coming up. Okay, logging into my paper account. Let's see if this one works. Then I'll just bring up my IB window. I may have to. Okay, let's see if option chain works now. It fucking works now. SPX. Okay, there you go. Okay, do you guys see the option chain screen now? Or you don't? No? Okay, I need to reshare my screen. 1 second. Okay, do you see it now? Oh, yeah, okay, awesome. Okay. And I can't move it. Okay, now, man. Okay. So, question is, which contract you going for which time? Because it may be slow price. It's not about slow price action. Okay, first of all, the first thing I look in the morning is the IV. If you guys notice, every morning I come in, I tell you what the IV is. If it's below 20%, it's tradable. If it's above 20%, I have to be cautious. Okay, so that's why I look at IV. And typically, because I know most of your accounts are below $5,000. So if you notice, the highest contract I've been going in the past 4 weeks for the month is like close to this range, the $5 or 3.7. So how I do that is, so this is the middle line of option chain. I'm just going like 2 contracts down, either on the calls. Same thing about 2 to 3 contracts down on the puts. But my idea is to actually look for something that has good volume. Or if in futures right now the volume's gonna be shit. Some good open interest, some good volume on the contract, and in the price range of $4-5. Okay, that's how I select a contract for you guys. But what happens during in the afternoon session or closer to close, so after like 2:30 p.m., is because theta is the number is lower, theta is decaying, the value of the contracts is actually pretty low. And secondly, at that time, if you notice, I only do lottos, and we play those with the profits we make in the morning, right? And those are typically below $1. But at that time, again, it's only like, if you notice in the option chain, it'll only be like the second contract down from the median line. Okay, it'll just be like 2 contracts down on either side, calls or puts. So that's how I select contracts for you guys to alert. Okay. I think, is there a second part to that question? Yeah. So that's it. That's how I do it. Next question is, when you're waiting for a pullback, when you should consider entering, deciding if it's the bottom of the pullback. So amazing. The answer to that question is the best time or the best way to enter on a pullback is on the wick. If you're trying to enter calls, it should be a wick bouncing off the zone or your support line. Let's say it wasn't the zone, it was something else. And for puts, it will be a wick on the upper side. Okay. Trading view is a little bit weird today, but okay. So let me show you this one. So amazing, you can look at this. Although the price action was really choppy, this is probably close to like FOMC. It is, right? Okay, let's not take this example. You can see now? Fuck's sakes. Okay, 1 second. How's this sharing work? Like, why can I not just do like the whole screen? Okay, you should be able to see now. So amazing, I'm gonna go over again. So what I was saying was, if you're looking for a pullback entry, you wanna see the wick at the bottom for calls on the pullback to enter. This is telling you there's buying pressure here. Okay, at the same time, you wanna see volume on SPY or SPX. If you're not watching SPX USD, I think SPX has the volume. Yeah, see that? It has volume bars. You can do that, or you can watch volume on SPY. Okay, and inverse applies as well. on, let's say you were trying to enter puts, you need to see there is a wick or a bearish candle for you to enter. Okay. And sometimes you'll notice that like all these wicks and candles does not need to fall inside the zone or anything amazing. It's just basically, it's a supply demand area, right? So for example, now this is not a good example. It's actually, even for me, it'll be a harder entry to enter puts here. Let me see like a strong rejection. So the FOMC one is a strong rejection, but I just didn't trade it because it was freaking FOMC. But like even something like this, okay, look at this here. So because I'm a conservative trader, I'll admit it proudly, I miss these things. Why? Because I want like more confirmation. Why risk my money on when I'm not like sure? So what I'm trying to say is this. So I'm gonna show you something cool today about my strategy. Okay, so look, whole move is like bullish. This is a pullback, and this is like sideways. It's not really bullish, it's sideways. Bullish here, and then it starts to go sideways, and then it stops here. Now I don't know this is gonna go down all the way fucking down. Like no one knows that. Do you guys know this? Answer me right now. We don't know what's gonna happen in the future, but do you know that this price is ready to go down another 50 points? Please answer. Do you guys know that? How many people know that? Because like, you know, when I'm trading sometimes, in trading chat, people will be like, yeah, I knew this. I knew it was going to go down. Have you seen those people? I'm not going to name anyone. It's okay. People know, right? But how many people think it's going to go down now? And what is the reason behind it? Anyone? Yeah? No one? Because I see people in trading chat coming after the trade. Oh, I knew it's going to go down. Thing is, like, not many people know that unless you're like a fucking billionaire, right? So let's play this. At what point do we realize it's actually gonna go down? I'll play at normal speed. Okay, I'll play like fast speed. So these wicks are forming, and I'm gonna be honest with you, I'm actually gonna miss this trade. For whatever reasons, right? I'm just gonna miss this trade. I just know because it's sideways action, price stopped here. I'm most likely I'm gonna miss it. Is this during the day? It is, yeah. And I probably missed this trade. I'm not sure if you guys remember, I missed this trade, the short, right? But the reason I missed these trades is because I want to catch like the real fucking trades. Now, if I had the line there, I don't know if at that point in time on May 1st I had this line there, I would enter this here. Why? Because I know price was going sideways, it stopped, okay? And if I did have this line here, it bounced off the zone, came back, rejected, you enter puts here, you take out here, you exit here. I'm going to continue because the real trade comes even after that, I think. So I'm probably going to miss this trade too because I don't see a rejections. So Amazing asked me, right, about this pullback. Yeah. So I'm probably going to miss too because I don't see like a wick at the top. Most likely, even if I enter, I probably won't alert it because I'm not going to be sure about it. Okay, let's continue. Let's see if we get like a really good trade here. Here we go. Is this aftermarket action? Yeah, fuck that. See what happens here again. Pre-market though, we're not taking it, but yeah. Okay, we're coming close to open. Let's see what happens out. Okay, look. This is not open though, but yeah, still. See how the price just reacts to these levels, you know? But one thing is now, at least on the 15 minutes, the trend is bearish. See what we're doing here? Price came up, stopped at a zone, formed a lower high, and now we're here. Gonna run through this again. Okay, so here's the question. Are we taking this trade here or no? Is this Tuesday? Yeah, we probably took this actually. I just don't remember if we did. How many people are taking a short here on this candle? Would you take a short here on this candle or this second candle? Yoboshi, I'll get to that in a minute. Does this make sense? Why would we take short here at the second candle? So my point is, I missed this trade because it wasn't clear enough to me. Now the trend is bearish on 15 minutes, right? Okay, I come in the morning on Tuesday at 9:30. I have this candle. Then I have a doji, not really doji. And notice this one thing about this candle here. Okay, pay attention to these things. Okay, these, oh, for fuck's sakes, trading view. Not cooperating today. I can zoom in. What's happening today? Okay, I have to drag it. I can zoom in. Okay. Please let me zoom in. Thank you, TradingView. Okay. So notice the wick at the top is bigger than the wick at the bottom. I'm not sure if I saw it that day, but I just noticed it now. The wick on this candle, the wick at the top is bigger than the wick. This usually means there's more selling pressure. Common sense, right? And then after that, we get this rejection of the top on the zone and we enter for puts, take profit at the zone in 15 minutes. And this is probably an easier trade on the 5 minute. Let's see. This is May 2nd, 10 a.m. What the... Trading view. What the fuck's going on today? What did it say? Look how easy it is in 5 minutes. Yeah? So price came down, consolidating, down, oh no, up, rejection, boom. Well, no one knows that this is gonna happen, like all this move is gonna happen. But the point is, if you can catch that, right? So if you catch this, here's your stop loss. If you have the stomach for a wider stop loss, you go here, but I would go here for small accounts, and that's it. Because you're not gonna catch this wick. Just let's be practical, okay? When you see this wick, you're not gonna be able to catch this, right? You guys know that, right? You're not gonna be able to short at 41.50. You're probably gonna get somewhere here, like 41.48, 41.49, or even 41.47 for people who are really slow at executing. So you need your stop loss somewhere, and that's gonna be here. And if you have a, huge stomach, high risk tolerance, you go here. Okay, I guess we went really deep into it. Yoboshi, that wasn't an inverse curl at the top. I know which one he's talking about. Yoboshi, I know which one you're talking about, bro, but what time? 4:02 p.m. So Yoboshi is saying, so Yoboshi, if you see, I just inverted the scale for you. Your lower high is here, right? Oh, on the 15 is better. Yoboshi, was it this one? April 26th? Oh, 1 second. Let me get out of replay mode. So this one, right? May 2nd, 11:40. That looked different. Even I'm confused now. 1 second. Oh, because we were inverted. That's why. Sorry, my bad. Let me go to May2nd. Yeah, this one. Please don't do that trading view. Okay. This is May 1st, right before that big drop. So this one here, where my mouse is right now, right? So I'll invert the scale here. Okay, so what Yoboshi means is if this was a lower high, this is actually pre-market price action, but Yoboshi, you're right. So if you're coming down all the way here, this is your lower high, you close above it, you enter on a retest, probably get stopped out, and then enter again. There you go. But you will not get stopped out because this is pre-market price action, and we don't trade any of that. We don't trade any of this. This is like after 4 p.m. and before 9 a.m. So you don't trade any of that. We don't typically do it. Why? Because it's on low volume. Okay. Yeah, but the idea behind a curl is to actually enter above a previously made high on a retest. Okay, I think we're done with the agenda. We went like 10 minutes over today, but let me just double check. Yeah, we did. Okay. I will stop the recording here. Or Yoboshi is saying risk to reward. So Yoboshi, if you the thinking behind my trading is risk to reward is pretty automatic here. Let me show you what I mean. If you look at all of the trades that we enter, right? I've given a thought behind it. So if you look at it, we're risking 20 to 25% to make anywhere above 25 to 50 to 100% most of the time. I'm just going to quickly cover it for 2 minutes, Yoboshi, and then we're done. So if I'm telling you that I risk 20 to 25% to make anything above 25%, that means at a minimum on one contract, our risk to reward is 1:1. Okay, but the performance tells otherwise, but I'm just saying at a minimum. That's being conservative, right? But now if I bring up the I'm not sure if you guys can see that. You guys see the Discord, right? Yeah, you do see the Discord. Okay. So if you see this now, this is the last week, right? Look at the percentages. So if we're risking 20 to 25%, this 10% is probably like Apple. You can ignore that. I'm talking SPX. Just ignore the stocks trades here. Most of the time your return is like, the lowest return is 23%. Usually it's 30, 70, 60, 100, 170, 50, 230%, right? So your risk to reward ranges from 25%, which is like 1:1, to this one is like from 25 to that is like freaking 1:10, right? So your risk to reward is actually ranging from 1:1 to 1:10, depending on the trade, the situation, the time of the day, the type of the trade we're doing, right? So it's gonna fluctuate with SPX is what I'm trying to say to you. Okay, it's not gonna be the same, because if you were trading Forex or if you were trading some stocks, it'll be different. I'm gonna stop recording here.